starting off with gold, we had been anticipating the bullish move that was pending around this 1991, 1993 area, right? We had been talking about keeping an eye, right, on the pattern, and we see it playing out beautiful, right? Now, it did play out throughout London session, obviously. I'm going to show you where I personally snagged a small buy here today. We did obviously have some, issues when it comes to the company sites and everything today. So I had sent a tap to trade earlier for NAS, which I'm going to talk about what happened with that one. But I was gonna send this gold one out, but unfortunately, we just didn't have the systems up. I'm like, hey, look, let's just let this day kind of blow over, and we'll come back to it tomorrow or Monday. But essentially, in the grand scheme of things, right? Everything really starts with when we had news on Tuesday, right? On Tuesday, we had the massive drop with CPI. Now we know, guys, that as a principle, a mindset principle when it comes to how the markets work, whatever comes down must go up, and whatever goes fast doesn't last. I want you to remember those two little phrases. And I'm somebody that's not really for the corny little cute sayings, but it's just a good way to really instill that, to remember, right? To remember some truths about how the market really operates if you just back test enough and you really see how it plays out. And again, whatever goes down eventually comes up, right? So you can't stay in one trend forever. That's why you have to take profits. That's why you have to know when to close out a trade. That's number one. And number two is what goes fast doesn't last. And what I mean by that is when you see price form a huge meltdown like this, for example, during news, we can expect price to fully recover a huge drop like that at some point. The question is the timing, right? And fast forward, multiple times we talked about throughout the sessions on Tuesday evening, right? When it was the beginning of the consolidation, following that CPI news on Tuesday, we saw price kind of, make this low right here, started coming down, started showing early signs that we were kind of going to start eventually reversing, right? But again, that was premature if you jumped in too quickly, right? So here, you see this low get raided. We think that we're finally reversing, that low gets raided. We think there's finally reversing, that low gets raided. So this is examples of where you can take a stop loss, a stop loss, a stop loss, trying to catch this move too early. I hope you really see that, right? You can see the way that price grabs liquidity, and then finally here, what's the difference here? Is that we finally get a break of structure to the upside right there. That is the first time we get true evidence that the market is actually shifting back bullish. Because up until this point, we don't really have any clear structure indicating that we're willing to go up, except there, where we break structure. And we test this line, and that ends up going into London session and making this impulsive move that we're currently riding, which, how it plays out in this area right now is going to kind of be up to, debate now. But essentially, we're starting to see that expansion, and I continue the expansion tomorrow to end the week is what I'm thinking, right? If not by Monday. But everything is playing out to the T, right? And it's because the market does the same thing over and over, guys. It's just a matter of experience, right? Understanding the flows and how it behaves in certain conditions. And so whenever we have news and we have huge drops or huge pushes to the upside, vice versa, it doesn't matter. It's whenever we have a big push in the market that leaves imbalance, right? So that's where, if you haven't been through my Educator Academy, if you haven't been through any of my content, and you're on these live sessions, you may not know what that is. If that's the case, definitely go through it and just learn some of the concepts that I use. And essentially, imbalance is very simple, guys. The market needs to really behave like this for it to be evenly priced, meaning there's buying, selling, buying, selling, buying, selling, buying, selling, right? A very nice distribution of both sides. Now, if you notice, this whole drop right here, where is there any buying that has taken place yet? Right? There is none. There is no buying that has taken place back up in this price range ever since we dropped. So what do I like to look for? I like to look for the wick, right? This is the last wick right here. Make this very obvious. And the next wick is all the way up here. Right? This is where the drop started and where we started getting some pullbacks and dropping again. So this is important to understand because notice how as soon as we come above this little wick right here, what happened? We got that nice rejection. That is not a coincidence. And that is how you're able to confidently understand why the market does what it does when it does it. A lot of strategies or ways that people trade is based off of a couple general things as far as zones, right? And I use zones, right? I mean, I have a zone literally marked off right here that has been a crucial confirmation for me when it comes to looking for opportunities, but it doesn't create precision or a necessary understanding of why price does what it does, where it does it, right? Zones are just pieces of or certain price points where the market just happens to go to and bounce off of multiple times for whatever reasons that I have no idea, right? I don't control the markets. I'm not, that's not my decision making, right? But for whatever reason, this 2018 580 level, we've just seen it bounce there and return there and create opportunities off of that so many times. Some people may call that support and resistance. I call it a key level, right? So that is important, but it doesn't explain or give you like real precision. I love imbalance because when I see imbalance, I can calculate a lot more easily why price is going to go somewhere. So whenever I see huge dips like that, I already know price is coming in to fill this. I have zero hesitation. This is like one of my most confident tools as a trader to know the future direction of where price should be heading, right? Because I understand that these are inefficiencies in the market. This cannot remain like that. This needs to be balanced out with buyers at some point. So again, notice how as soon as we come above this wick, we get a steep reaction. Somebody that doesn't understand imbalance, right, may see that and kind of panic or kind of worry about price doing that. But if you understand imbalance, you would anticipate that and say, okay, well, we expected that, right? So a lot of the times when people get out of trades early or they just mismanage trades or whatever the case is because they get surprised, right? Something happens that they did not expect, that they did not plan for. And then they're like, whoa, my plan goes out the window basically, right? Now it's just kind of reacting to what they're seeing in the moment instead of kind of just sticking to the overall game plan that was created before the moves even happened, right? Because those are usually the greatest trades, the ones that you have preparation that you plan for, it makes sense on the pre-analysis and everything, and they may work perfectly, but how it actually gets from point A to point B could be a whole journey that if you try to calculate exactly where the pullbacks are, exactly where it's going to bounce off of, I mean, you'll kind of go crazy. You'll feel like you have to be watching the chart every other minute to manage the trade. But the key is really understanding where's the good entry and the good exit. And then at least, obviously protecting your entry, right? If you're up a good amount, this is a good habit to break even, move your stops to break even and at least protect your position, but let the trade ride. Okay. So for example, again, we get this crazy reaction off of here right now. And yeah, we may see some selling off that. But in general, this doesn't really worry me as far as like for buy positions off of here, right? Because again, from here to here, that's a huge gain, right? That's like what, over 120 pips, right? So if we get those ebbs and flow pullbacks, whatever the case is, the overall thought process is still coming back up into this area. Not a matter of if, but a matter of when, right? And that when is typically going to be when we go back in session, either London, but mainly New York, and then during news, which we have tomorrow, which can definitely sweep price into the direction we might need it, right? So for those who have been following me this week on the sessions, and we've been, again, from day one anticipating this exact thing, right? That is, like, if I had to tattoo anything trading related on me, it would literally be this pattern right here. Because that is what it's at. That's manipulation, change of structure, entry, and continuation. That pattern right there is everything to me. And we see that again here, right? Cool. So let's check the chat real quick. Hello. Yeah, so I mean, because it's market structure, right, guys? I mean, we know that after a huge dip like this, price eventually is gonna slow down. But when's the right time to pull the trigger on getting in the trade? Right? It's when structure starts to realign with the direction that you believe it's gonna go to. If everything is bearish, 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 where does it go bullish? Right there. And then we wait for a pullback potentially, and then you can really ride the wave. And that creates a really good risk to reward scenario. It creates a clean entry that maybe has little to no drawdown, right? There's a lot of benefits of trading that pattern. It's just a matter of seeing it, taking it, etc. And so if you guys actually took Maddie's trade, so Maddie called out the buys from like right here during his session yesterday, which was ideal. And he doesn't even trade like me, to be honest with you, which is the greatest part, right? But it was definitely a buy that, made sense given the situation. Obviously in the moment where it became a very clear buy was when we started breaking this high right here, right? Because here it was, we kind of saw, right, that we did shift structure right here, but it wasn't that convincing of a shift of structure. It wasn't like one of those super obvious ones, but it did do it, right? And then the fact that the lows got respected here and then we broke, this was really the clean buy right here. And that's the one I actually took today. I already exited the position, but yeah, I'll show you that. This rejection is on 50% fib, like you mentioned. Yeah, exactly. I mean, if you want to even use all of my confirmations, I didn't even really get into that. As you can see, like when it comes to fibs, it's helpful to me in certain situations, and there's certain times where like I feel like I don't even need to use it, but it adds another layer of confidence if you feel like you need it. But yeah, if we pull the low to the high, right, like you're mentioning, from here to here, we definitely hit that 50. And we know that when it comes to discounted price, pretty much anything from 50 to 78 is that crucial zone, right? Once we get to 88, that's kind of like the danger zone for me. So for me, 50 to 78%, which we tapped in right there, is a nice retracement level to get in so that you can, obviously save yourself some drawdown. Because if you guys enter off the break of structure right here, it's still not bad, right? But you will have a wider stop loss if your stop is here versus getting in here and having the stop here, right? You'll save yourself a good, I imagine, at least 30 to 40 pips just kind of eyeballing it. Yeah, 50 something pips. So, 50 pips could make a difference in your R to R, your risk to reward ratio on something like that, right? Let me delete this because this looks crazy right now here. Cool. So yeah, all in all, I mean, this key level of 2018 500 roughly, right, is always still important, right? Somewhere where we could reject off of is obviously this low right here, because this is the start of the supply zone, which is this pullback before the big drop, right? So price could really just come up into anywhere in this general area and then have it sell off, right? But personally, I think, it's a good chance that we come up deeper into the retracement, simply because this is a key level that I expect at least for here to touch, right? And then if we actually look at smaller time frames, I think like the 5-minute, 4-minute, and we really refine this, we'll start to see like when did the imbalance really start? I think it's on the 4-minute right here. Yeah. So on the 4-minute time frame, this is where I use smaller time frames to really get precise with entries and exits, right? This is not where I base my direction, my analysis or anything like that, right? This is just for trying to really extend the trade profit and to minimize the stop loss. That's it. That's the only reason why I like to utilize smaller time frames. Or really sometimes to get ahead of the trend. Like if I have a zone that I'm in, and I expect reversals off that. Sometimes on the smaller time frames, that gives me an early indication of the shifts of structure that start the new trend. Because if you haven't noticed, I'm really like a reversal trader, right? That's what I personally like, because when you trade reversals properly, you're entering usually at the beginning of what's going to be a big move, right? So if you enter correctly, you should have little to no drawdown a lot of times, and you have great risk to reward, right? That's just personally what I like. But here, this is why I have this imbalance marked off here, because you can see that the imbalance really starts on this candle on the 4-minute, right? So if we're really going to extend this target that we have set for gold buys, right? We can expect anywhere from where we're in right now. It could pull back to here. You know, what it's going to do here right now is kind of questionable, right? But essentially, from this general vicinity, we're going to get into this general vicinity, right? And that's going to be roughly, just from where we're at right now, about 280 pips. Or let's even kind of be conservative and kind of say, even from here to the key levels, 100 pips. From here to the beginning of this imbalance on the 4-minute, anywhere from like 130 to about 180 pips. Right, so anywhere from 100 to 180 pips is what we can expect with this further move to the upside on gold. Oh, let me show you this nice entry. Hold on. Okay, so I'm gonna replay this really quickly here. All right, so let's really dissect this, right? So we look at structure, right? Low, high, break a low here, make a high here, break a low here, and this is where we shift. And I'll make this one blue. All right. So notice points of structure on the smaller time frame. We sweep this low, right? And where we shift structure is right here. Because this is where price starts to break above. You can see that price broke to the downside, faking out, and then it broke above the high again. Right? So this is where price has shifted structure, which means that this low should remain intact. Right? So we start seeing that we form basically like a nice key level off of the top of this right here. And so that's why I said, you know, Maddie bought like really early, which was amazing because it gave a great risk reward. He literally bought like right here, and it caught that whole wave up. So shout out to Matt. Personally for me, like even though we got the shift of structure and everything, it wasn't like a very aggressive one. It was kind of like subtle. So for me, once I started seeing these pullbacks here, I was not comfortable buying here specifically on this one unique setup. But, and this is why I didn't call out any buys at that time, is because I was sleeping during London session, where we ended up, again, you know, we shift structure here, started pulling back. And then once we got to right here, this is where I got the green light to take a buy, because not only did, you know, we shift structure and pull back, but now we've made another new high above this zone. That's, for me, that's like super patient, like high probability winning entry on the buys, right? Now all of that leads up to basically this section right here. Now I'm gonna drop this, I think, to like a 5-minute, 20-minute. All right, cool. Let's go here. All right. So for those that know how I trade, I want to see if you guys can tell me a re-entry opportunity for me that happened after news today and during New York session in this range, right? What zone did you think I would buy in, right? Do you think I'll kind of give you guys a hint, right? So this is gonna be blue line. This is gonna be green line. This is gonna be red line. and this is gonna be yellow line. All right, so where do you think out of these lines is where I personally, based on how you've been learning from me to trade and everything, that you would say would be a good re-entry area where price is within this range, right? Like knowing how I trade and what I look for and what you've been learning, like where do you think I would like to enter? Yellow line, red, red, red. Okay, so we got 3 reds, 1 yellow, 2 yellows. Uh-oh, yellow's coming back into pace. And again, what I'm just to reiterate, right? I'm not saying that like I'm not saying what would be the ideal place that I would get in like here in the past or here in the past, right? I'm saying like assuming that because I just use replay mode, right? If price is here right now, where would I want this to pull back to get in, right? Would I wait to get in here now, or would I wait to get in here, or would I wait to get in here, or would I wait to get back in here? So if I didn't make sense, then my bad. I'm saying like given where price is right here, right now, where would I want to get in on a pullback? Right. So I think Tony changed her answer to green. Yellow. Okay. Green. We're getting some different answers now. All right, all right, all right. Green. All right. Absolutely no idea. Hey, that's perfect. That's why I want to do this, right? So here's my thing. Like I can talk and talk and talk all day and like here's the thing, right? This is why I tell people, and I've told you guys on the sessions before, that you can hear me talk and go over a market, and I used to do this all the time, right? With when I would learn from people, and it sounded so easy, like it sounded so crystal clear, it made so much sense, but I was listening to somebody else at the end of the day, and like when it came time for me to apply it, I was just like, damn, where's my mentor? Like, like where's that person right now to tell me where to get in, basically, right? Um, and so that's why I do these questions, because it'll really kind of reveal, if you're aligned, like if you the way you see the market and what you've been learning, or maybe you just haven't learned enough yet, um, is gonna take place. And so that's why again, you gotta kind of know what do we need to look for to get into a trade, right? So I'm gonna do this checklist really quickly, and then I'm gonna ask again. After I do the checklist, I'm gonna ask again. Um, Let me put up. Oh damn! Did I just? Can I? Can I put back the lines? What? No, don't tell me that this thing. No, that's crazy. All right, I'm gonna have to put the lines up real quick again. Hold on. So red was here, and then yellow was here. All right, cool. I'll try to delete as much stuff here as possible because it looks a little crazy. All right, so checklist, right, of what we look for. Number one is trend or structure, right? That's number one. So as far as the trend, like, within this range that we're looking in, right? Are we bullish or bearish? Bullish or bearish, which means are we buying or selling? Is it going up or going down, right? Bullish. All right. I mean, that's pretty easy, right? Like price is going up, pretty obvious, right? Okay, cool. So if we're bullish, should we be looking for buys or sells? Right? Buys. Because we're trying to go with the trend, right? You're trying to go with the momentum. All right, cool. So we know that we're going for buys. So that's the bias that we have in our head now, right? So trend structure indicates buying. Okay, cool. Number two, is going to be key levels, right? Now, we don't necessarily need to trade off of a key level every single time in order to take a trade, but this is just a checklist of what we ideally like to look for. So for example, here, right, we already said that this is a key level. So taking a trade off of this level, number 2 was definitely a confirmation that was utilized. Now, I will say, I mean, it's kind of impossible, whether it's blue, green, red, or yellow, there is no key levels in any of those entries. So that's why I'm saying you don't have to have every single confirmation to take a trade. It's just the more that you stack confirmations, the more high probability that the trade should be, which is why at the end of the day, buying off of the break of this key level here, right, is like the best trade, because you would have caught all this and we're still like halfway to final targets here. So that's a huge trade, right? Hold on, I just saw something in the chat, I think. So bullish equals buy. Bullish just means that the market is going up, right? That just means that the market is going up. Bearish means the market is going down. That's all that means. But if you're somebody that believes that you should trade with the trend and trade with momentum of where the market's already going, then if you're in a bullish market, you should be buying to continue going with the wave, right? You want to, it's like you got to look at this in a way like surfing, right? Because if you are trying to go against the current of the ocean, that's how you die. Like people that try to swim in rip currents, you can't do that, right? So you got to go with the wave, and if the wave is pushing bullish, you got to go bullish, right? But there's a tactic to going with it, which is basically what I'm going to show you right now, right? So why not enter a trade now and just write it out until it goes up? Okay, perfect. This is you see, this is the interaction that makes the world of a difference. Okay, so I'm gonna use Annie in this example real quick because this is gonna help a lot of people. So why not just get into a trade right now, right here, right? Okay, perfect. So let's just assume that you magically knew the perfect target level, right? Which is what I'm projecting, let's say, right? All the way up here. So all the way, let's say it gets to the very end, right here, right? 2024 to make it clean. All right, cool. So we're getting in now because Angie says, why not get in right now, right? Okay, perfect. Yeah, I mean, it's bullish, right? Let's just get in right now. Why not? So where would you put the stop loss, right? That's the biggest thing, because if we know where the market should be heading, it just makes sense. Like, just keep buying, right? That's kind of what people are doing right now with Bitcoin. People are like, oh, we haven't touched 50K in forever. We're like basically all-time highs for the year. Perfect time to buy. Right? But they're looking at it from a very long-term perspective. And that's more like buying and holding, investing. When it comes to trading, guys, there's something that we use called a stop loss, right? So my question, I guess, Angie, right? And I'm not picking on you, right? But it's just a good example since we're talking, right? Like where would the stop loss go, right? So let's say that we put the stop loss in a really safe place, right? The stop loss all the way down here would be the safest, right? Because I mean, come on, there's no way we're coming down here, right? Well, what's the issue with this? You have a negative risk to reward ratio, and you have a 221 pip stop loss. If I go on a cautious tab to trade and I call out a gold buy right now, and I have a 220 pip stop loss, and my target is only 175 pips, you guys would probably report me to Josh to get me fired. Just being honest, right? Just being real. But this is where we start to understand the process of why this is something that's not easy, and you have to be very precise, right? Okay, so why is this a bad trade? Why is this a bad trade? Is it because the stop loss is 200 something pips? For me, the answer would actually be no. The fact that the stop loss is 200 pips, to me, that doesn't really mean much. For me, what makes it a bad trade is what are we risking and what are we making? Exactly, R to R. So if I'm getting a 0.8 R to R, I might as well go trade binary options and do it on the 1 minute. And I'm not throwing shade at binary options by any means, right? To be clear. But what I'm saying is with binary options, for example, when you jump into a trade, you're risking let's say $1 and you get paid out a percentage of that trade, right? You're risking $10 and your payout is probably 65, it's probably $6.50, $7.50, $8, right? So it's a negative risk to reward ratio, which is why on binary options, you have to have a huge win rate. You can't lose a lot of trades because the math won't math. The math ain't gonna math there, right? But when you're trading on MT5, when you're trading this type of style of trading, what you have in your favor is risk to reward. It's saying I can control the number of pips in my stop loss and I can control where my targets are. And so if I continue to develop a strategy where I get precise entries, right, where I have a decent stop loss for what makes sense on a structure from a structure standpoint, and I have targets that go at least 1-to-1, 2-to-1, 3-to-1 plus, then when I have my winners, they're going to make up for my losses. And all I have to do is win half my trades. If I win 50% of my trades, but my winners do 2%, 3%, 4%, and my losses are all 1%, it works. Some people like that. This is why you like, guys, please know the math of how it is to be profitable. At least know the math, right? If you don't know where to place stop losses, where to get in, like that's the hard part. I understand that, right? But you have to, if you want any chance of seeing your account have consistent growth, you need to calculate your risk correctly. And you need to understand risk to reward and find and enter positions, whether they're from an educator or yourself or both, that have a positive risk to reward ratio. If not, you're going to go back and forth and you're going to go crazy and you're not going to know how people make money. Right? So for me, like so when so when the gold trades have $3 down and $3 up, would that be a 1-to? Correct. If it's 3 down, right, like they say, and 3 up, that's a 1-to-1 risk to reward ratio. And I want to be clear, 1-to-1 risk to reward ratio is not bad. It's not bad. Because I know people that just trade straight 1-to-1s and it's good, but their win rate is high. Like their win rate is probably 70-80%. So it kind of makes sense because you're, winning. Like if you go take 10 trades, right? And you're at $1,000, right? Or let's just say you have a 100K account with TradeX and you are doing straight 1-to-1s. If you win 8, you're up 8%. And if you lose 2, you're down 2%. You're net profitable 6%, right? You win 8 trades, 3 up, 3 down, you're up 8%, minus the 2 losses, you're up 6%. If you do 1-to-1s and your win rate is 50%, you're breaking even. So it's even then it's not really bad. This is what messes people up, right? What messes people up is that you'll take a trade, like you take a trade and you take a loss, and it was a calculated loss, like you lost 1%. Okay, cool. I lost 1%, whatever. You take another trade and you lost another percent, and you're like, damn, right? I'm down 2%. All right, there's no way we're losing a third one, right? So we take a third one and it wins, but you close it early. You close it early and you make 0.5%. Now you're still down 1.5%. And then you get into a trade, right? And you close it early again and you make another 0.5%. Now you're still down 1% because you took 2 L's, -1, and then you took 2 trades that kind of won a little bit and you're still down 1%, but you recovered a little bit. So you're like, yo, you know what? Next trade, I'm going to go in with a bigger loss size because this is going too slow and I have dreams and goals to accomplish. and you go and you risk 2 or 3% the next trade, and then that one loses nasty, and now you're down 4%. Just like that. We're taking 5 or 6 trades, and you won 2, lost 3, but your winners, you close them too early, and you're not allowing the risk to reward to save your account. See what I'm saying? And this is very elementary, and I'm not saying that like as disrespect or to make you feel like, oh my god, like why don't I get this, like this. What I'm saying is that if you guys expect success, if you expect to win, and you don't do the bare minimum of understanding the math, guys, like you're just living a dream, like you're living a fantasy. You see what I'm saying? Like we make things simple and we try to make it sexy, and it is, right? But if you want to really like do big things with trading, and you don't do at least understanding the math of how much you need to win and how much you need to lose, and having bigger winners minus small losers is the key. Like just start understanding those things, right? And all of this has been why I can't even log into it right now because the Cosmic's website is down, right? But I have my whole boot camp that has been up since December of 2022, literally has an entire video just like what I just broke down, with more examples and more detail than what you're seeing right now. And it's been there probably since for sure since the day you started, because I started before all y'all, right? But how many people took the time to go through it? And it's okay, like I get it, because a lot of times you're either brought into this platform or into trading, right? And we just want to get real excited to place trades already on our TTT account, and we want to get funded, and we just want to get straight to it, right? But man, if you only realize that it took like maybe 3 or 4 hours of watch time and like note taking for you to go from making, I'm not gonna make any income promises, but like your account going on steroids to you blowing the account is probably just 3 hours of you watching a couple videos and taking notes. Can you believe that that's the separator? I mean, I'm looking at people that like right now in front of my building, they've been building this new apartment complex right here. These people are there like at 4 or 5 in the morning, busting their ass building this thing. In the cold, like Houston's been in the 20s, 30s, like a lot of these days, like in the cold at 4 in the morning building this thing. And some people like get annoyed or like feel like it's too much work to watch 3 hours of content to take notes to make money on their phone pressing a button. Like, come on, y'all. I'm just saying, like, I gotta keep it real. Yeah, 100%. And my sessions, yeah, the game is won off the field, 100. I don't know who Zoom user is, but comment of the night. Yeah, man, look, the lab is the stuff behind the scenes. Like, I don't know how many times I've fallen asleep watching some type of trading content since 2018. Like, just fall asleep on the computer. I mean, John Balad, let's go. Okay, we got a name to the comment. Let's go. All right, so I'm done ranting, guys. But I mean, really though, every time I go on a rant, like that's where it's at. Just know when Richard starts ranting, like it's the most important time of the session, because it comes from a place of passion. Because like I'm not smart, guys. Like I'm not I'm not gonna put myself down either, but I'm not gonna say that I'm anything different, right? Like I'm really not. There's no educator that is special at all. Every time I meet somebody that I used to look up to, I always think to myself like, man, this person ain't nothing special, bro. I've met some people, man, that like are on stages in front of hundreds of thousands of people, and like, man, you just talk to them and you're like, bro, like, respect to what they've accomplished, and like, praises and all that, but like you ain't really nothing. Like you're not all that, in the sense of I can do it too, right? You guys can do it. Like you guys can watch a couple videos and take a couple notes. And I'm not telling you to become a chart expert. I'm not telling you to be a signal caller. I'm not telling you to be like Nostradamus on the charts and like calling out the craziest moves and marking up charts. I'm not saying none of that. All I'm saying is understand what it takes to grow an account consistently, which is, hey, if I'm risking $100, well, first of all, do you even know what you're risking on a trade? Sometimes we jump into, and I get it, TTT is calculated, right? Like it's auto calculated and stuff like that. Like that's on the educators and on the technology to be on point to automate that and make it, I understand that part, right? But, assuming that, let's say down the line things change and you can alter your lot size, or you're taking the trade signals instead of just TTTs. Like I send trade alerts too. I prefer trade alerts sometimes in a way because you guys can decide to take it or not and like manage it the way that you want to manage it, right? And I think that helps you develop a lot more than TTT, in the sense that TTT is just created to, just deliver good trades as much as possible from educators that just basically do it for people. But trade signals allow you to get into like the mind of the person sending it and be in the trade, so that way you can jump in at the right time, put the stop loss, put the TPs, manage the way that you close out. If you like closing out at TP1s or 2s or 3s, if you let it go past all the TPs because you think it's going to keep going, like it gives more of a real feel for what it will be like to you taking your own trades down the line, because you're managing the trade. Trade management is where all the emotions come out and where like the money's made, right? If you just have really bad, like you'll be surprised how fast you guys can get good at finding entries and like exits. But once you get to that stage where you kind of know what your entry criteria is, then it's like, how do you manage the trade? That's a whole different beast, right? All in all, guys, this is not a good trade because we have negative risk to reward ratio. Okay, we agree on that. So where do we put the stop loss? Do we put it over here then? This is still not even a 1-to-1. And this is 166 pips. So if I call a trade like that, you guys are still going to come for my head. So I'm not going to call that trade, right? So where do I put my stop loss? Do I put my stop loss over here? That's 106 pips. This is a 1.4-to-1. Now the question is, are you okay with taking a 1.4-to-1 risk to reward trade? At this point, if you're over a 1-to-1, I'm not gonna, like, I wouldn't crucify you for it. Like, I don't think that's terrible, right? But it is 106 pip stop loss. And again, sometimes people see a 50 pip stop loss on gold and they think the world's ending because that's the craziest stop loss ever. So this is double the craziest stop loss ever, according to some people. So I don't know if you would take that. Me personally, I don't think it's bad. Like if you want to go for 1.4-to-1s, you know how I roll. Like for me, if it's not a 3-to-1, I'm not even gonna attempt to look at it. At minimum, a 2-to-1. A 2-to-1 would be like right here. This is where the trade becomes decent to me. 2-to-1, right? So let's say that we go with that, or you guys tell me, right? Like where should I put the stop loss? Like, do you like tell me if do you think I should put the stop loss by the red line, by the green line, by the yellow line, below that? Like where do you think I should, where would you want to put the stop loss? Because Angie said, why don't we just get in right now, right? Because it's already pushing up. So, where would you guys want to put the stop? Again, by my standards personally, like I wouldn't get in here personally, but if we're gonna say, hey, like Angie says, yo, let's get in right now because it's bullish, right? I would put my stop loss at least here, because at least that gives me the 3-to-1 risk to reward ratio. Tony says the red line. Okay, if we do the red line, that's a 2-to-1, roughly a 2-to-1. Right? 2-to-1. That's not bad. That's not bad. 2-to-1, we got, but that's 75 pips. That's 75 pips though. So I don't know if you're okay with 75 pip stop loss, because like, for some people that's way too much, right? Wait for the retest before getting in. What does that mean though? Like the retest, Like for me, a retest is if like price breaks this and then it comes back here, that's the retest, and then you get in. So retest, like, I don't know what you mean, if you mean like seeing how it reacts. Because remember, we're getting in right now because Angie said, hey, why don't we just get in right now because price is already pushing, right? So I'll get straight to the point, right? If we get in the next candle, that's so messed up. Obviously, I already knew what was happening, so I'm just kind of messing with you guys, right? But this is why, like, personally, I always say, like, I don't want to chase a market, right? Because what Angie said was actually a great point. Like, if we're just thinking logically, yo, price is pushing right now heavy and it's bullish, like, get in right now. But again, the issue comes to, where do we put our stop loss? Because we got to put one. If not, we're not calculating our risk and we're just gambling and we're not going to have consistency and we're going to blow our account. So we got to put the stop loss somewhere. Now, why are we putting the stop loss at the red line though? Because it looks far enough, because it looks like enough cushion, right? There's people that trade, like that's how they think when they trade. And then they hit stop loss, right? Now, personally, so we were doing the poll, right? I would get in at the red line. Okay. Now, the reason why I would have gotten in on the red line is because one of the things I look for, right, is liquidity grabs, manipulation that takes place in the market, right? And the way that I look for it is the wick. You know what I'm saying? Like if you guys know how I trade, I always enter off of areas of manipulation, typically in the form of a wick. Here, this red line is the beginning of that zone where we see a demand zone form, right? In the form of that wick. You see? Because we had all of this liquidity buildup, or somewhat liquidity buildup here, right? Right? All of these little lows right here. And this is because news hit, right? News had hit here. If you go to a smaller time frame, right? This is what some people you'll call an order block, right? Or a demand zone, whatever. This is that last down candle, right? Before price broke higher. So when price retraces into it, we can see it react off of it. That's always what I look for, whether it's buy or sell scenarios. On the 15-minute, I like it the most because again, we have the liquidity grab fake out during news. You see price tank, and then it ends up pushing back above to open, and then it closes very bullish. So this whole push to the downside was making people very impulsive to sell right away. If we look at it on a 1 minute, right? Imagine looking at price here. Like, it's easier to look at it in hindsight, right? But in the moment, imagine you're here and you see price push up really high, and then it just tanks like 87 pips. 87 pips in 1, 2, 3, 4 minutes. 4 minutes. 4 minutes, price tanked up 87 pips. Right? So, dude, come on. I mean, let's look at this. Price skyrocketed, pushed down. This has to start selling. I mean, this thing, look how hard it just dropped. And then it just completely goes the other way. How do you explain that? That's why that's why this is a fake out. That's why that's manipulation and why it shows this way on a higher time frame. You see? So that's what I look for. I look at, where did the banks or the market makers go in where they made it seem like the market was going to go one way without a doubt. Like, if you look at that on the 1 minute, you're like, dude, this thing's going to tank. And then it just completely does the opposite. That is the fake out. That is the manipulation, because you yourself just saw how confusing that price was. That's where I like to re-enter the market later, because I understand that price will revisit those manipulation areas again and react off of them. And again, when you look at it on a smaller time frame, like a 1 minute, I'm sorry, there's so much candlestick action going on here for me to clearly see any form of entry. But what I found over time, this was just on my own personally. Like, I just started realizing every time that I would look for those areas of manipulation, that they would look like certain. I would look at it for like on smaller time frames where I would see it in the form of a candle, like the 5 minute, for example, right? Like I always used to look for this. Oh, this is the last body before you see volume come in. You see price fake here, and look at the volume come in the next candle, right? So I was like, oh, this is the candle, right? And then every time I would go up a time frame or two, I would notice that every time it was a wick. And I'm like, bro, hold on, like this thing always looks like a wick like that. And then I started back testing it, and I started seeing that every single time that the wicks formed like that and price touched it, it would react. And I was like, yo, that's crazy, because now I get to stay on higher time frames, which helps me with managing my emotions, with entering the trade and managing the trade. Because the smaller time frame you go, the harder it is to manage the trade, the harder it is to manage your emotions, because you're seeing it move so much and so quickly, because again, you're looking at smaller time frames. When you kind of zoom out and look at it on a higher time frame, you don't feel the same type of speed or emotion typically, right? That's a psychology hack for me personally. But yeah, for sure. So this is the wick, right? Okay, cool. So boom, 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 wick. Now somebody mentioned fibs earlier, right? So boom, okay, we get that reaction. Dun, dun, dun. All right, here. So now clearly we have a high put in the range and we have the low put in the range. This is the range that we're working in. So if we pull the fib from here to here, we see that this zone is below 62% and 88%. That's the ideal retracement range. And from there, what we need is we need price to form a reversal pattern, like how we saw on gold already here. Price going sideways, fake out, change of structure, and then continuation. We need that same thing to happen over here now. All right. Boom. So 5 minute, right? Come in. Now let's look at something like a 3 minute. All right. So keep in mind, we need to see price slow down, fake out, push, and then continue like that, right? Sideways, fake out, shift, continuation. All right, let's see. So me personally, I did not get in. I could have put the limit or entered right off of here. I did not. I entered a little bit later, like right here. Let me actually check. Hold on. 1999.70. 1999.70. Right here. That's where I got in. And I had the stops here for a 40 pip stop loss. Right? Targeting here. Well, really, in reality, for the long term, targeting at least here for a 4.7 to 1. And this was the one I was gonna call out on the platform, but again, like things were down, so unfortunately I didn't call it. But this was the idea right here. So boom. So here we go with the pattern again, right? Sometimes the pattern, it's the same thing though. You're seeing it on a more macro scale here, and now you're seeing it on a more micro scale right here. But it's the same idea, right? Price starts to wedge, and then we break out, and then we turn around, right? Also, fake out, continuation. That pattern, I'm telling you, like it's everything, because it's structure. It's a structure reversal, right? So whatever, price basically has been kind of fighting, yada yada, and this is kind of where we're at right now. So that is you know, like the way I perceive things, right? That's the way I trade. Um, looking for structure, bullish. Okay, cool. Is there any manipulation that we can see? This is for me clear, right? We look for that wick to the downside that grabs liquidity. We also have, you know, a push, a break of structure to the upside that confirms that, you know, price is still bullish. Because sometimes you can have these little wicks like this, but then price doesn't really make like a clean high. And so those zones end up failing. But the fact that this created this wick and ended up closing all the way up here, it makes this zone very strong. And we saw price react and get in, right? Just to do the continuation. So that was that. The NAS trade, really what happened there, guys, smaller time frames, 15-minute. We had this key level that basically formed. We had this key level that basically formed here. Right? We see that we had you know, this and then this, and then we started reacting around there and we broke below it, right? We saw that price came lower. So my thought process was coming in and continuing that trend below that key level. Also, if we pull up the sessions, you guys know I've been talking about the Asian highs and lows, right? Notice how we had the Asian high here today and we poked that right at the beginning of New York session for 8:30. And once we poked the Asian high, that thing just started rejecting off of it. So that's why I don't ignore Asian highs and lows, regardless if it's indices or if it's gold or anything. Those matter, right? So that was Asian high. Oh, I still have them marked. Yeah, you can see here Asian low right here. So this was the Asian low right here. Price broke aggressively below that and then pulled up. So that's why I wanted to sell off of it. And we had gotten a nice reaction initially. Like we got in. Oh, crap. So we got in. And really what I was looking to make sure that it held and why I was kind of confident in this trade was this wick right here. Right, that was that last wick that pushed up here before price broke and closed lower. Right, so really I was like, hey, this high has to be respected on this pullback and then we have to push back down. So my entry, I think it was roughly around here with stops over here. Yeah, because this was a 1-to-1 right here. Yep, this is exactly how it was. And then I was looking at, okay, well, where could we really target? There was this imbalance all the way down here, some resting liquidity here, this liquidity here. So I'm like, okay, we can just extend targets out to here for final targets. But if we can even just snag like a 1-to-1 or a 2-to-1, I'd be happy with it for tap to trade. Boom. And then we got a really great reaction like right away. Boom, boom. We were like basically right there getting to TP1. Or yeah, like really like our first real target. We were up like 400 something pips, almost 500 pips, which is what we were risking. And from there, price just kind of respected that little like last low right here and started coming back up. And it's crazy because the thing is, I was anticipating news at that time, and we started really pushing up on the smaller time frames here. Hold on. Because in hindsight, it looks so simple to not have closed out the trade at break even. But at this point right here, I was like, man, like we had gotten the good reaction. We were almost to TP1 and now we're like back almost above entry. I'm gonna just call it break even and call it a trade, and we'll look for something more later. And like literally, because I was expecting news and then it went like that. I'm like, bruh. So, I mean, honestly, that's the thing. I mean, I just really wanted to get a dub on tap to trade and I overthought it and I closed it at break even. I could have just let the position ride. Obviously, we would have at least hit a 1-to-1. I know some people ended up like manually taking it and then they ended up catching this move right here. At the end of the day, like the real targets that I really had planned out for this trade and the bias that I thought we could really maintain, especially after seeing this, just completely went out of the window. As you can see, eventually we ended up like just exploding to the top side, right? So in reality, like the real move of the day was like this push to the upside, and not this small push, right? So it was kind of like, whatever, like there's no harm done if you take a break even. Some people even made some profits. I'm like, all right, whatever, but that's just the reality of the trades. That's why personally, like, I like the trade signals, but tap to trade, I'm probably gonna stick more to gold or maybe even do a little bit of like EU or something like that. Because indices, I mean, it's quick moving. Like it's really quick moving. It's definitely a lot more volatility. So we'll see. I'll adapt over time when it comes to that. Now for me personally on the 15-minute, and I'll leave you guys with this. I'm not scared to switch biases if I see something not going a certain way. So for example, when we took the break even and then we ended up coming back down into heavy profit and then we started coming back up again, I'm like, all right, well, if we start coming up above this key level, I'm going to go for buys and at least take us up to here, right? Because again, we've already seen that with key levels, if we are touching, we've got into here. So if we broke lower and now we're breaking back above it, I can expect price to at least touch here. And so me personally, again, this was when everything was kind of like down on the website and everything for us to send out trades or anything. Once I saw this 15-minute candle close right here, I went for a 40 point move right here. And targeting this as my first target, really the highs for a 2-to-1. It was the idea here. And then my final targets were filling in the imbalance up here that we left behind from that initial drop for extended targets. But really like just being in this general vicinity was my main priority with this trade. Because a 2-to-1 isn't bad, right? But taking this all the way to here would be like a 5-to-1. And yeah, basically right away, just going with the momentum, seeing that we were breaking back up above the key level once again. That's why key levels are really powerful. If they're very strong key levels, they're very powerful for you deciding quickly like what direction to go in. Because again, we have the touch here, here, here. When we push above this, we see that it can get to here. When it pushes below this, we've seen that it can get to here, right? So that's why we were looking to sell at least to here. Now, once we were in the sell, the trade went well, it went into profit, and now we're breaking and closing back above this high. That's a clean buy signal, at least to get to here. Key levels on the indices, especially NAS, is like top tier, like confirmation. So right away, boom, blast through the zone, little pullback and everything, and just tap nasty right there. Ended up coming back. And now I think price kind of just pushed a little bit more and it's like respecting. So like right now, you guys can see it respecting this key level again. Like where we're at right now, you can see how price is respecting this level. So why do I bring this up? Well, if this is a key level and price is still breaking up above it and respecting it, then this may be a clean buy location to keep going to further targets, right? Now I will say we're out of session though, right? Here we were still within session, so it's kind of different. Here right now, this is a great zone. If this was New York session, this would probably be a great buy opportunity right now. And it can be, but just keep in mind, we're not in session, right? But you do see the respect of the key levels, right? So this was basically my revenge season on and I'm just kidding, right? You don't want to try to revenge trade, but going break even on Nas, I'm like, all right, cool. I'm gonna really keep scoping out the zone, because if we keep like, you know, touching it and then breaking, I'm gonna get in on these sells, right, and end up catching the trade that I missed out on from closing it too early, right? But same thing, vice versa. If we're breaking above that key level again, I'm gonna just take the buy and forget my original bias. I don't hold on to my original bias. I was wrong, right? Like it worked temporarily. We could have snagged 500 pips for a 1-to-1 and cool, but I mean, like my other trade the other day on Nas, like I'm trying to go for 1,500, 2,000 pips at a time if I'm risking 500 every single time, right? Yeah. So, all right, cool. So we've been on here for way too long. I need to eat some dinner. I need to stop talking. But I hope you guys got a lot of sauce today as far as what I look for, how I treat the markets, mindset, risk management. I mean, really, we covered as much as we could really cover, man. Not gonna lie. Not gonna lie. All right, cool. So much love, guys. Appreciate y'all that tuned in today, whether you are, you know, here live or whether you are watching the recording. But man, I mean, everything I talked about, it's just hearing you, like, you got to hear this type of stuff over and over and apply it, right? You got to apply it. You got to mark up your own charts and take your own opportunities and just fail, guys. You got to fail forward, right? There's a great book by John Maxwell. It's called Failing Forward. He talks mostly about leadership and spirituality, in terms of personal growth, leadership, and dealing with people. But I mean, it's the same thing in anything, right? You gotta fail forward. You gotta make calculated mistakes and learn from them. Don't worry about burning a $50 account or $100 account or losing a challenge. Like those things, guys, in the grand scheme of things, are so petty for the vision and the dream that you guys have for yourselves, right? Never let one prop firm account, one personal account, like if you can't handle losing $100 personal account or blowing one funded challenge for like a couple $100, like psychologically, you literally are not ready for your goals and dreams because that rattles you. So I'm not saying to throw your money away and go crazy and not care about losing or failing, because you do have to have pride and you do have to aim for success and not expect failure and like demand better. But like, let's be real. If you're worried about petty stuff like that, you're not ready. You're not ready for 6-7 figures. You can't handle it. God is not going to let you touch your next level until you can handle the small things. And that comes with faith. Like you gotta have faith, man. That I don't know what the heck Nas is gonna do over the course of the next 5 minutes, 24 hours. I never do. You never know what the heck the market's gonna do. You just have faith in what you learned, that it plays out.